Hello, James. How are you?
Hi, Leo. I'm very well. How are you?
I'm very well. Thanks very much, James. Very well. Thanks for catching up with us again. Last time we spoke, James, the markets were a bit wobbly. How's things been in July?
So there's been a bit more day-to-day volatility. So there's one day in July, I think it was the 19th, when the global equity market suffered its biggest one-day drop since February. But they did recover quite quickly from that. And once again, global markets have ended the month with a positive return. So the general trend is still recovery from, obviously, the sizable impact of the pandemic. The FTSE 100 was flat this month. The US market did quite well again. The S&P index rose 2.4%, and European stocks were also up this month. So it's been another positive month overall.
Excellent. Thanks, James. Around the world, before we go on to the hot topic of inflation, is there anything else to note throughout July?
Yes, well, I say markets are up. There was one market which did particularly badly last month, and that was China. So the MSCI China index fell 14% last month. And this is mainly due to Chinese authorities imposing some quite severe regulations on the Chinese tech giants such as Tencent and Alibaba, and more recently the big education firms as well. They've had some harsh regulations imposed on them, and that's sent some shockwaves through the Chinese stock market, particularly those which are listed overseas.
Mm-hmm. And have the Courtiers funds fared okay through that? Is there anything that we need to be thinking about?
Yeah, I mean, we have very, very minimal exposure to China via a core emerging markets ETF. Most of our emerging markets exposure is through individual stocks, which have been selected by our value model and analysed by an analyst before being invested in by the funds. So our emerging market exposure has very little in the way of Chinese exposure.
Thanks, James. Okay, so inflation, we've got the report out today. That's not out at the time of filming, but what are we expecting to happen over the course of August?
Yep, so that inflation report, which is due out today, the indications show that inflation in the UK, measured by the Consumer Prices Index, is likely to be close to 4%, which is up from 2.5% in last month's inflation update. And markets have been a bit spooked by this. As if inflation rises, this could also lead to interest rate rises. And I mentioned last month that this can impact both equities, but especially bonds. So the bond market is most vulnerable to a rise in interest rates, particularly long-dated bonds. If inflation does rise and interest rates rise with it, then there'll be a massive shock to the bond market, especially long bonds, which is why we have very minimal exposure to long-dated bonds. And our duration in the funds is very low. But
I know that Colin spoke to you and the team recently about that and put a piece out. We'll link to that in the written commentary alongside this video. And I know he's going to be keeping an eye on things in the coming weeks as well, James. So I think we'll leave it there. Thanks very much for the update. Appreciate it as always. And I'll catch up with you again next month.
thanks a lot, Leo.
Thanks, James. All the best.